Okay, we'll get the ball rolling. Um, Welcome, everybody, to this second webinar on overnight trading. The webinar really came about really just down to the level of interest that we've had and the feedback we had from the first webinar. Just to introduce myself, my name is Edward Mangles. I'm the Regional Director of the FIX Trading Community here in Asia Pacific. Um, I'm not going to really do much of an introduction, other than just to say that as the fixed trading community, we rely on the input of our members and the work that gets done in our committees and working groups. So we are looking at some of the implications around overnight trading, also 24/5, 24/7 trading, and what its impact might be on the FIX standard itself and how we may be able to help as a community. So as we go through this discussion, please do think about how we as a community may be able to contribute to solutions and then get involved. Now, I'm going to hand over to our co-chair, our Asia Pac co-chair, Murray O'Brien, and he's going to lead us through the session. Thanks, Murray.
Thanks, Ed. Appreciate it. Welcome everyone to the second webinar on overnight trading in the US, presented by the FIX APAC trading community. I'm Murray O'Brien. As Ed said, I'm co-chair of the APAC steering committee at FIX. For decades, the rhythm of the US stock market has been defined by the traditional 9:30 a.m. to 4 p.m. trading window. But in recent years, a new, quieter tempo has emerged, the overnight session. Driven by a surge in retail investor interest and the interconnected nature of global markets, this once niche activity is growing, presenting both opportunities and unique complexities. While it still represents a small fraction of the total market, with overnight activity hovering around 0.1% of the total market, the number of symbols traded has steadily risen, nearly doubling in the past year. The most active hours are at 9 p.m. and 3 a.m., not coincidentally aligning with Asian market opens and close. This growth is testament to the modern investor's desire for 24/7 access across all asset classes. At the heart of this evolving landscape are US broker-dealers. They're no longer just facilitators of standard hour trades. They are the critical bridge between global investors and their brokers and the venues that support continuous trading. Today, we'll dive into this critical relationship. Without brokers providing access to these venues, the overnight market would be inaccessible to US domestic as well as international investors. This infrastructure allows for trading, but it's not without its own challenges, including lower levels of liquidity at the moment, wider bid-ask spreads, potentially heightened volatility, as well as challenges around market data distribution. Understanding the symbiotic relationship between broker-dealer and overnight trading venue is key to navigating this new frontier in US equities. I'd like to welcome our guests. All of them are from the US, and it's a very early start for them, and give them the opportunity to introduce themselves and what their involvement is with overnight trading. Tonight, let's start with the brokers. Ed, could I hand it over to you to introduce yourself and what you do and who you work for?
Sure. My name is Ed Hosty. I am with Robinhood Securities. I am the Vice President of Execution Services, so all things trading and routing at Robinhood. I've been here for 4 years, and we've been engaged in the overnight market for about 2 years now, primarily on the Blue Ocean platform. Yeah, so we've been around for a little bit.
Thanks, Ed. I might pass it over to Steve. Steve, same question to you.
Hi, everybody. My name's Steve Sosnick. I'm with Interactive Brokers in Greenwich, Connecticut. I'm currently the firm's chief strategist, have been for several years now, but the bulk of my career was spent as either a proprietary trader and before that doing customer facilitation. As I like to put it, I was doing 24-hour trading before it was a thing, because my first job was at Solomon Brothers. And we were facilitating customers buying ADRs on things like BHP and News Corp and stuff like that. And so I was up in the middle of the night 24-hour trading, but it wasn't the same thing, but because I'd have to convert the ADRs and stuff of that nature. But as it's grown, we've been offering overnight trading, 24-hour trading, as it would be. Pretty much, we offered extended hours for years. We joined the 24-hour parade when it started, and we act as both broker and exchange owner, because we also have an ATS that we sponsor, that we run out of Hong Kong. So I wear two hats on this discussion, and I'm very happy to be here. Thank you.
Thanks, Steve, for that introduction. Might start on the venue side with Brian. Brian was on the first webinar, as was Jason, but just to recap for any new joiners to the webinar, Brian, do you want to introduce yourself and what Blue Ocean does?
Sure. Brian Hinman, the CEO of Blue Ocean Technologies. We run the Blue Ocean ATS, the alternative trading system. On any given night, we trade over 5,000 NMS or national market system stocks, and we have our data distributed to over 23 countries worldwide now.
Thanks, Brian. And same to you, Jason.
Great. Thanks, Mauro. Good morning, good evening, everybody. My name is Jason Wallach. I'm the CEO at Bruce Markets, operator of the Bruce ATS. Similar to Blue Ocean, we are operating 5 trading sessions throughout the week from 8 p.m. to 4 a.m. Eastern Time. We are running on NASDAQ technology, which is powering, several hundred markets around the globe. And excited to talk to everyone today about the overnight session. Thanks.
Thanks, Jason. And finally, Dimitri, do you want to introduce yourself, what you do? And thanks for joining.
Thank you. Very good to see everyone. I'm Dmitry Galanov. I'm CEO and founder of 24 Exchange. We are the first exchange in the world that got overnight license, and we've been working on this project for many years. And finally, it's coming to fruition. We're launching very soon in 2 weeks, and we're looking forward to the panel.
Thanks, Dimitri, and that's very exciting for you guys. I'll switch over to the questions now that we were done with the introductions. I think we should probably start off on the trading front with the actual brokers. Ed, what has the client feedback been on trading overnight, and what has been the catalyst for connecting to these venues?
I think so. We are primarily US-based BD and US-based customers, and I think that initially for me, I've been surprised at the engagement from the start on this front. I think that we've seen steady interest since we started connecting in the overnight session, and it's continued to grow. I think our customers have really been engaged in trading basically anything. They like to trade news overnight. They like to trade world events, so they engage with both the ETFs and the single stocks. And I think that we offer about 1,100 securities at this point in time. And we've seen steady growth. I think we have a lot of customer base that is crypto first. So people that started on the crypto side and have more so gravitated back towards some of the traditional asset classes. And for them, opening and closing hours was not a normal thing. They were just, trading has been open and available since they started doing so. So bringing equities to the overnight session was a natural fit for most of them. We've continued to see growth in a pretty steady trajectory, and we're excited to see where it goes next.
Thanks, Ed. And Steve, does that ring through to you? I know you're kind of wearing two hats on this podcast, so maybe you can give us that perspective.
Sure. I mean, our customer base is actually quite international. So we've been it's funny because it depends how you answer the question. As I ran this discussion past different people in the firm, one answer was, yeah, we've always been open 24 hours for our customers, because if they wanted to trade in Asia, they've been trading in Asia. If they wanted to trade in Europe, they trade in Europe. And we really didn't see it that way. The others, of course, said once 24-hour US trading on US equities came around, we were quick to embrace it because our customers were eager for this. Just again, I used to pass a book around and have to adjudicate between the traders in Hong Kong trading Hong Kong Shanghai Bank, and then the traders in Europe trading the Hong Kong Shanghai Bank, and then me trading the ADR and having a resolve the bickering. So there has always been a 24-hour market. It's just from a US point of view, it hasn't really been. And so we partnered with Blue Ocean. We route a lot of order flow through them. We use our smart order routing technology to get the best execution between the available venues at any given hour of the day or night from our point of view. And the customers have been quick to embrace it. I think a lot of our volume has come from Asian domicile customers, as much as anything else, because basically the whole world wants to trade NVIDIA, and so let them do this at whatever hour in the night.
Hopefully there's more than just one stock that's driving this.
It obviously is. Actually, a lot of the volume, and Brian, you can I'm sure attest to this. A lot of the volume comes, our volume comes in leveraged ETFs. They love trading, TQQQ and why trade the NASDAQ if you could trade 3x the NASDAQ is really, I think, the mentality. So we do see a lot of interest in those type of names too.
Yeah, that's fair. We do see a lot of interest in the leveraged ETFs, but I would say NVIDIA and Tesla for the past week has been the most active. If you go to Bloomberg and you go on the Blue Ocean tab there, you can see all the most active stocks, and Tesla's been the leader this past week.
Thanks for that, guys. And just moving on to connectivity to the venues. Like, obviously, there's two brokers in this call who are connected to your venues. Like, Jason, is there any limitations on who can connect into Bruce, or is it anyone?
Great question, Mara. So as we are set up, all of our direct clients are U.S. broker dealers. From a connectivity standpoint, U.S. broker dealers are able to connect into our matching engine, which is hosted in the Equinix NY4 data center in Secaucus, New Jersey. Options are obviously a cross connect within the data center, which is the preferred option for anybody that does have a presence within NY4. Otherwise, there's a series of partner extranets to provide connectivity. That said, upstream from our subscriber base are, a list of global broker dealers and trading participants, which, may access Bruce ATS, one or more of those direct subscribers. But ultimately, anybody that's interested in, expanding their offering to 24 hours and participating in the U.S. overnight session, certainly there is a growing contingency of U.S. broker dealers looking to bring that product offering to their clients, both domestically and globally.
Thanks, Jason. And I might ask Dimitri, given that you're going to be going live soon, and you're not an ATS, you're a fully fledged exchange. Is there any limitations on who can connect, or is it the same limitations that Jason just talked about?
It's very similar. We use MEMX technology, so it's very similar to Blue Ocean. When people connect to Blue Ocean, they also use MEMX. But very similar. A party has to be a broker dealer. We do offer sponsored access, where a broker dealer can sponsor a non-broker dealer into our exchange, but certainly all the responsibilities for the trades and compliance would lie with the broker dealer who become a member of the exchange.
Thanks for that, Dimitri. Brian, does both have anything? Like, I guess you're in the same, not to have a pun, but you're in the same boat as the other guys, right?
We're in the same boat. So we only interface with U.S. broker dealers. But we have roughly, call it almost 60 US broker-dealer subscribers on the platform, but we have nearly 120 firms globally taking our data. So obviously, all those firms taking the data don't come in directly. They'll come in through a USBD. So that's half the equation. The other half of the equation is really market data and market data distribution. They don't have the market data, they can't trade. As we all know here, the SIP or the Securities Information Processor does not trade overnight from 8 o'clock p.m. to 4 a.m. So we rely on direct connects to get our data out to our customers, along with a variety of distributors like Active, ICE, Refinitiv, Bloomberg was the most recent to carry our data and distribute it. It's on Yahoo Finance overnight. So it's not just the brokers getting connected; it's also getting your data distributed globally.
No, that is like an interesting point, and it's a question we're going to come back to later in the webinar. Now, Ed, from a broker perspective, like how do you connect to these overnight venues? Is it simple as any other venue that you're connecting to existingly, or are there more challenges around it given the kind of overnight nature and resetting connections and so on and so forth?
So since we started a few years back, we've actually introduced via third-party wholesale market maker, which is our preferred path to markets generally. The change that we've seen over the 2 years, two to 3 years so far, though, has been pretty stark difference in approach. Where when we started, there was basically only one venue that would support this flow for us, and essentially as just a pass through. What we're seeing now is more broad engagement, and what we see is some of our traditional venues and traditional wholesalers are coming to us and more actively engaged, and I think that we're essentially at the point where if everybody is not there now, they're asking questions and trying to talk through timelines and when they're going to be live. We've seen a real sea change in the participation from that part of the US ecosystem that we, for ourselves, find extremely beneficial. It is our preferred means of accessing markets. And the more we have there, the more competition we have, and the more we'll begin to see that ecosystem really, really continue to blossom in the States.
No, thank you, Ed. And Steve, same to you, like both from, again, with your two hats, both as like an ATS and as a broker. What are, I guess, the challenges in connecting to you guys, and is there any limitations on who can connect to the ATS?
In terms of from a customer point of view, our customers, flip on the screen, it's there. That we just provide the quotes at different it's at different hours. It's relatively seamless I shouldn't say relatively, it's seamless from their point of view. In terms of the ATS, we obviously certainly would welcome other people joining in, and in terms of our connectivity to others, I mean, we strive to provide best execution, and so to the extent that the liquidity exists, we are always interested in making sure that we can offer that liquidity to our customers, which is why from a customer point of view, the experience is agnostic. You're not directing it to our ATS or another one. You're just you're entering the order, and we will route it as intelligently as we can see fit. And so I think from the connectivity point of view, we try to make it pretty easy, both inward connections and outward connections in terms of us to others.
That makes sense, and you want the path of least resistance for anybody who wants to connect, right? Like it shouldn't be a challenge.
Yeah.
Brian,
Mark, can I jump in for a sec on that? Just
to
Steve's point, like I think the approach that Interactive Brokers has taken here is really sort of setting a model for going forward, right? You've got sort of the first to market smart order router, if you will, right? And as we know, like others are coming, right? People will follow suit, and the reality is that mirrors a significant amount of, if not entire amount of how orders are routed and navigate through the core trading session ecosystem, right? So what we're seeing really is this phase of maturation of the overnight trading session, right? It started off as a single market ecosystem, right? There are now 4 operating ATSs, right? We are seeing growth. If we look at Bruce, we actually had a record night last night. We are growing. We surpassed 20 million in executed notional, with a growing number of subscribers, creeping up to about 20. So volume and market share is seeing early signs of creating true market level competition and a multi-market ecosystem. And it's tools like what Interactive Brokers has and what others are bringing to the market that are going to begin to help customers, really take advantage of that market level competition, the pricing competition, the tighter spreads, what will be future innovation that will ultimately bring. And so I think when I hear Steve talk about that and I hear Ed talk about what his counterparties are bringing, what we're really seeing is something that's going to be very exciting in the coming months and years, as really this takes shape as a permanent piece of our trading ecosystem. So it's exciting.
To Jason's point, if I may, one of my mantras is liquidity begets liquidity. And so to some extent, the more we all bring to this, of course, you need customer interest. Without that, we're spinning our wheels. But to the extent that the liquidity is there and the more people who participate, it does have a snowball effect.
I think also, this is Dimitri. I want to add that the fact that the exchanges are entering the space certainly would bring the liquidity up. What we saw is that when we started our exchange and we got the license, the first license, we thought it would be mostly kind of Asian retail versus like US high frequency market makers. But very recently, and we see kind of as we launch our exchange, who is kind of onboarding and testing, very recently it turned out that there are a lot of institutions, banks that have calls from their Asian institutional customers, not retail customers, institutional customers, asking to provide access. And I think this is all is driven by the fact that ourselves and New York Stock Exchange received the license. So we got they got slightly after the permission. And I think it's not only the sea change for retail brokers, but also the institutions in Asia are demanding to trade in the convenient hours for them from their banks, and the banks are connecting to exchanges like ours.
Thanks, Dimitri. Sorry, Ed, go ahead.
I wanted to echo that as well, is that some of the sea change I've seen over the last 2 years is that when at infancy, myself and I think with Brian as well, pounding pavement and really trying to drum up interest from participants that weren't yet in the marketplace. Nowadays, it's essentially the opposite, where people are trying to find time to talk to me or talk to anybody on this call about what's happening in this marketplace. And I've sat down with buy-side institutional firms that they're like, listen, our clients are coming to us and saying what's happening overnight, and we need to be there. And that's such a welcome change to watch it. And some people that were, previously resistant, I basically said, my job is going to be to make sure you can't be resistant anymore in short order. So I'd make sure you get everything in order. So hopefully that translates to people beating the doors down at with Brian and Jason and Steve and Dimitri.
Yeah, I would add there that it was all retail flow at the beginning, and we had to go out and knock on the doors. But now we see more hedge funds and institutional players coming in, especially Bloomberg. First month on Bloomberg, we had 53 different firms sign up to consume our data on Bloomberg. Those generally are not retail customers; those are hedge funds and institutional type customers. So I do see the ATS model thriving here over the next couple of years. I know the exchanges want to get into it, but I still think, that is, further out. There's SIP work that needs to be done. There's corporate action work that needs to be done. It looks like the SEC is focused on OPR. They're focused on crypto. I don't really hear the 23, hour trading concept being mentioned at the commission anymore. Doesn't mean it's not happening. I just think it's getting pushed out further.
We still have that big bet, Brian. 3 years.
Got it.
What's bet, Dimitri, for anybody in the call who doesn't know?
Brian, we had a bet that I said, look, it's gonna be like next year is gonna go live 23 hours for the SIP and exchanges, and Brian's like, no, like 3 years. So we had you said 3 to 5 years. You said 5 years, I think you said more.
You said next year. I said I would take the over on that, and it was a dollar bet, just a dollar bet.
Yes.
So this whole conversation actually leads to something that, both from a regulatory side and just kind of best execution perspective, gets raised with the maturation of such a venue. Like, Dimitri and Brian and Jason, you've told us about, like, new players coming into the market. It's not just retail versus market maker. With those new players, are you seeing like a kind of momentum towards like best execution, and then kind of reflecting back on the regulatory side and the SEC around, like, trade through rules that happen during the normal trading day? What's the impact of that? Are you seeing any changes on that? Like, I might start, Jason, with you first, and then maybe we go over to a broker and have a switch around.
Yeah, I mean, I think it's really a very timely question. So, historically, with one venue, right, you could respond to a question of best X by saying, I'm connected to that venue, right, or I'm not, right? That's really it. Now with multi markets and market level competition, the brokers involved need to start evaluating, how they're connected, how they're interacting with these venues at a different level. Now, we step back and we look at things from a regulatory standpoint, right? The order protection rule, which, of course, today there's an SEC roundtable on, so we'll see what comes of this. But that order protection rule that essentially protects, displayed liquidity on exchanges at the top of book does not apply during extended hours trading, right? So there are, if you look at the pre and the post market, there are exchanges that essentially honor it. However, it is not enforced from a regulatory standpoint. And overnight, we now have, as we talked about, the 4 ATSs. There's no linkage today between those ATSs other than some of the early smart order routers that have come out. But again, that order protection rule does not apply. So what I think we will see here is a lot of focus on how firms are choosing to navigate through a multi-market ecosystem, what venues they choose to connect to, what market data streams they try to or they opt to consume. And essentially that data is going to become increasingly important. On the Bruce side, one of the things we felt was important to empower the retail community was an evaluation of our market data feed. And most retail clients take our top of book market data feed. So we offer 3 feeds. One is last sale, one is depth of book, which is traditionally consumed by, let's say, the smart order routers, and the other would be our BBO feed or top of book feed. What we realized was that our BBO feed was essentially operating on, I would say, more traditional market data display logic that prioritized round lots. So odd lot liquidity, which is not part of the order protection rule, essentially was, I wouldn't say ignored, but there was not full transparency into odd lots when they were representing the top of book. And with the overnight trading session really being retail driven at the moment and being, something that was brought to us really based upon the demand and the growing voice of retail, we wanted to create as much transparency into that top of book as possible. And so a few weeks ago, we made a material change to our top of book feed to provide that level of transparency. So you're seeing a true top of book feed with the Bruce BBO feed. So if the best price is for 10 shares or 5 shares or 33 shares, that is the price you will see rather than seeing, what would be representative of, the closest round lot, and potentially a wider spread than actually exists. So we opted to move towards a world of greater transparency, hopefully empowering smart order routers, providing retail with more transparent information to make informed investment decisions. And on top of that, we began offering immediate or cancel order types. So this is an order type that is commonly used with liquidity seeking algos and benchmark algos and smart order routers, during the regular course session. I believe it will be an integral piece for efficient smart order routing for firms like Interactive Brokers and any additional brokers that Ed and Robinhood may choose to use. So again, sort of in line with that maturation of the overnight session, we felt bringing additional order types to the table was in the best interest of the marketplace and the investors at the end of the day. So again, like I think part of it is the brokers asking those questions. The other part are the venues responding and building tools and continuing to innovate to support, what brokers and their customers need to actually achieve best X.
Thanks, Jason.
From the exchange perspective, in terms of regulation, the exchanges are a little different from ADSs. They follow Reg SCI, which is a constant obligation to provide resiliency. So you'll see the exchanges are, kind of super stable because of that regulation as compared to, ATSs. In terms of routing, yes, that's true that Reg NMS doesn't apply after hours, but in my view, the best execution still applies. So we're planning to route to all the ATSs as an exchange and other exchanges. So far it's New York Stock Exchange. So we're planning to route to New York Stock Exchange as well as ATSs. So I think it's important to have the linkage. So, the customer gets the best price. And I think it's very consistent with the best execution.
Yeah, it's really interesting, like sitting here in Asia and, you guys talking about what you're doing in terms of routing on to different venues. It's kind of a different world over here. So, from Steve, your perspective, like, obviously you're trying to get best execution with more institutional clients coming on board. There'll probably be a demand for it, but what's your view on it? And, how do you implement smart order routing and what sort of pressure you've been under from your clients, if any?
Well, I mean, I can't go into too many details because our smart order routing technology is proprietary and it's something we've been developing literally for decades. But our philosophy remains the same, and that is get the best execution for our customers, large and small, to the extent that it's possible. Obviously, in certain venues where there's more single listed and less competition, it's pretty straightforward. There's not that much you can do. In the case of the U.S., which probably has the most complexity of anywhere, it becomes a very difficult juggling proposition. And it's to Jason's point, you don't always necessarily know if there's small orders that can improve a price, and it's not only always about price improvement; it's also about fees and execution quality and execution time and things like that. So there's a lot of elements that go into smart order, what we call smart router. But in general, I think to me, the biggest testament to our smart routing is we off, we were arguably, I think we beat Schwab by like 15 minutes at offering free trades, on U.S. equities. But what happens is we offer two levels of customer. You can be light or pro, and the light, at least in the U.S., is commission-free trading, and the pro is we charge a small commission, but we assiduously route your orders, and the vast majority of our customers opt for, at least the vast amount of our order flow is done under the IBKR Pro scenario where the smart order routing is done. So to me, that's our customers telling us keep doing what you're doing because we see the value in it, rather than just we'll take a free execution if we can.
You're on mute.
And just on that, and I'd like to get Ed involved as well. Is there a difference between the Asian context and the US context? And Ed, from Robinhood's perspective, what's your view on best execution? Does it differ across regions? And is there any regulatory concerns you have about the OPR rule or anything else?
Yeah, happy to jump in here. I think that while the order protection rule, is not enforced in the overnight session, BestX is enforced every single order that I route. And, BestX is life, and we have to make sure we achieve best for customers. Like success for Robinhood dictates that. So I think we're going to be wherever liquidity may be. I think the scenario we find ourselves in today is Robinhood as a USPD and a early end of the spectrum on this front with the single stocks is building this marketplace and helping to do so. So it's this balance of what does the ecosystem look like in the future, and what's our cleanest path to getting there, and how do we grow that liquidity? And there's going to be a little mix, and we're probably going to have to be a little bit, I don't want to say reactive, but we're going to have to read where the market goes, and we're going to have to be there, and we're going to have to be out front. So smart order routers are going to be key for us via intermediaries or ourselves, making sure that we get a reliable and robust reference data so that we can show our customers best price so they can see that this market really is actionable. So I think that's part of the key for us right now is building out that liquidity so that we can show, listen, here's a market that looks pretty consistent with what you see for both regular session as well as extended hours. It more so seems like a natural extension and just a marketplace versus you thinking about a session at all. We see customers that do have different working hours or have different hours that they in their lives, and we see them engaging in the marketplace. And what they also like is to be able to investigate and do their own research and on investment, and they want to act right then. And what we like to have is the ability for them to act on that right then in a way that essentially is the same experience no matter what time of day it is. So like I said, I think we're gonna be, there'll probably be some iterations that we don't foresee in the future and on where this marketplace goes, but we're going to be bound to make sure that we're there and leading the way.
Thanks, Ed. And for you, Brian, obviously Blue Ocean is the most mature of the venues out there at the moment. What have you seen in terms of both the conversations around best execution and regulation around best execution that have changed over the years that Blue Ocean has been in place?
Yeah, I think as Ed said, best execution is paramount, right? It's not just during 9:30 to 4. So I think everybody's focused on it, in the pre, in the core, in the post, in the overnight. I don't think that has changed. What's changing now is smart order routing, right? We see a lot of brokers like Drive Wealth and others that are, taking in customer flow and routing out to the venue that has the best execution. So it's just going to become more and more in the future
here. Thanks, all. Dimitri, I just wanted to ask you one question kind of related, but as a new exchange coming on board for this, do you have any differentiators in terms of what you do in terms of overnight trading, be it order types or data services that might be of interest to the audience?
Yes, absolutely. And thank you for the question. So as a new exchange, we have to compete. There are 17 exchanges out there. Only one exchange outside of us currently has the permission from the SEC for the overnight, which is New York Stock Exchange. So, for us, there's not much competition in the overnight, but as an exchange working 24 hours, we compete with the exchanges during the day as well. So as a new exchange starting out, we provide two differentiating factors. One is by using, we are the first exchange that's using MEMX technology, which is the newest technology, exchange technology, which being very fast, flexible, and not very expensive. So because we're using MEMX technology, we can offer very aggressive fees. In terms of fees, we're talking about rebates. So um, if a client, a broker posts an order on our venue, we would pay 29.5 mils rebate, which is it's higher than other exchanges would pay. So that's one. The second bit is when we starting a new exchange, we created a warrants program, jump all program. So if we have a member that provides liquidity and they prepay $500,000 of commission, they can participate in the program. And over next 3 years, we're giving up 10% of the stock exchange towards that warrants program. So it's and the clients that get the stock of the new stock exchange will participate in growing the exchange significantly, and they realize the potential. And this is something that differentiates us from NASDAQ or NYSE. You can buy a stock of ICE, but it's not going to make any difference for ICE, because ICE and NASDAQ are already such a big companies. But for people that participate in our exchange and put the volume, it makes very big difference. So I think the fact that we are using more modern technology and have better economics as well as warrant program, those are the two key differentiating factors between us and the existing exchanges.
No, thanks for that. That's very interesting, Dimitri. And you touched on NASDAQ, and one of the questions I have is around, and it's jumping around a little bit, is on tokenization. Like NASDAQ is seeking approval from the SEC to allow trading of tokenized stocks. And Robinhood has an initiative that allows users to trade tokenized versions of over 200 US stocks and ETFs, providing 24/5 access. What are the implications and what are the differences between the two models? Unfortunately, we don't have anyone from NASDAQ, but maybe Ed, you can take a stab at from Robinhood's perspective.
So I think that from our perspective, the models are the same. It's basically the way in which people engage with the marketplace. So we do offer tokenization of U.S. securities, but who we offer that to is different than our primary user base. So we offer this to our RHEU customers via our crypto platform. We do have the equivalent of a medallion in the EU with our acquisition of Bitstamp, and a pretty strong crypto presence in that region. What we see is in tokenization is, for starters, we want to make sure that people are trading the underlier, trading the security and have all rights that are conferred with owning that security. What we see in the future is that tokenization does offer some real advantages and, I guess, an ability for us to make some of the operational hurdles that we've had in the past with things like DTC and clearing and settlement easier via a tokenized means. So I think that what we see today and in the near term future is simply, creating these tokenized versions of U.S. securities that are backed one for one with the U.S. security. But again, gives us that space and the ability to begin to use some of the advantages of blockchain in the future. So I think we think it's actually a benefit while it might seem confusing at first, what we do see is that we do trade the underlier behind this, and it's essentially growing the same ecosystem. So we don't want to force people into one way to interact with the marketplace, especially with a large percentage of our user base being crypto native. What we're doing in the EU now is giving those EU crypto native customers the ability to access this market in 24/5. So again, it is people like to act in their own hours, and there's not a direct match in the EU. Obviously, with New York trading hours, there's not even a match on the Pacific coast, no less the EU. So we're very early stages now, but we see continued expansion on this front. We see a world where we can also offer a tokenized variety in the States, but again, I think that that would be a world where we are still trading the underwire. But what we want to do is be able to engage in the way that people want to.
I applaud Ed and Robinhood taking the lead on tokenization globally there. We really like, the NASDAQ filing and what they're doing. It kind of works within the regulatory construct here in the US where it's going to, at the time of order entry, someone is going to have to know that they want that share to be tokenized after settlement, right? So you put an order on the book, it's still going to trade in the same order book that all the other trades are trading in or orders are trading in. So it still gets price time priority. No one gets priority over any other order or anything like that. So it looks very much like the NASDAQ stock market today. After it settles T+1, if you made the notation that you want it to be tokenized, DTCC will then go ahead and tokenize, that particular, share. So then it sits in this omnibus account over at DTCC, and DTCC will track that. All right. So any other DTCC participants at that point in time can go ahead and swap shares and buy and sell. There will be a construct for that, and DTCC tracks it all. So it all remains very compliant and remains in the regulatory construct and the clearing construct that exists today.
Although that until that happens, you do, at some point we've recreated, they're just CFDs on a blockchain in the short term until what you're saying happens, Brian, which means they exist outside of the regulatory and clearing framework without SIPC protection, that kind of thing. And so I think while I understand the logic of it in the long term, in the short term, until these things become more like actual securities, they're essentially private contracts, not necessarily subject to all the transparency of trading on an exchange, trading on a venue. And from a clearing point of view, they're essentially on the blockchain, but they're essentially obligations of whomever issued the token, which is very different than essentially cleared security. So I think it's an iterative process, and I think right now I understand the logic of getting there, but it's in the short term. I think of them more as sort of blockchain settled CFDs.
Yeah, I agree.
No,
It's an interim step to get there. Go ahead.
No, I agree that CFDs were in Europe for a very long time on stocks. It's really just more sexier name for it. I think, remember, there is always a price, right, to convert CFD to real stock. There is intermediaries. They all have to make money. The market is not as efficient, so the customer ends up paying more spread. So to me, yes, blockchain would be good for settlements, for streamlining, but so far the way it is, it's really just another name for CFD, and I think the market is less liquid than the actual market for the actual stocks.
Yeah. I mean, I think these are all good points. I would say from our side, we recognize it's something we need to be paying close attention to and see how a market like Bruce ATS, fits into an ecosystem where, tokenized equities, become, part of our ecosystem, right? And what I do here, again, through, as Brian brought up, the NASDAQ filing, and what people are talking about is, trading these, in a one-to-one fashion with underlying collateral, but also thinking about things such as optionality and transparency, right? If we do have a single kind of centralized, or at least, a small number of centralized mechanisms for reporting trades, right? So people can actually see what's going on. We are providing information to retail investors in a manner that is, at least in line with, some of the standards that we've set for the equity market. So what I would like to see are some of those things that, I think what we saw go wrong with some of the early phases of crypto. Look, if we see evidence that the lessons learned through that are actually, the market takes an approach that, I think focuses on, some of the benefits that we can bring, some of the efficiency that can be gained, but also, for us to say optionality to be able to trade 2 o'clock in the morning or whenever you want for the actual equity. If somebody does want to trade the token versus the equity, let's just make sure we've got a framework and a system that actually allows them to do that in an efficient, in a resilient, and transparent manner.
Yeah, I want to echo that. From Robinhood's perspective, we recognize the challenge on a go forward, like specifically where we're going today in some of the ambiguity here and some of the risks that might be introduced to the system from people, things like bad actors. But the good news is that as a regulated industry, we've dealt with bad actors since the beginning of time, and I think that's the. I don't know that there's necessarily even new challenges here. It's just making sure we remain vigilant and make sure that for the future state, we get to the right spot. And I think that we want to make sure that customers have protections in the same way and no world in which there's actually a downtick on that front. And while they're short-term ambiguity, I think that we'll get to the right answer. And in the meantime, we want to make sure that our customers can engage in the way that they want to. Yeah, and I think that's again, it'll be who knows where the world's at in 5 years, but we want to make sure that our customers can be where we can meet our customers where they're at. So we look forward to seeing where this goes.
Thanks. It's interesting, and obviously there's different models being worked on, and it does seem to be moving quite quickly. We're coming to the end of the general session, but before we switch on to the Q&A, the audience Q&A, I just want to get the panel's impression as to what's going to happen in the coming years around 24-hour trading, overnight trading in the US, and be it tokenization or other technology enhancements or new players coming to the market or new market participants from different parts of the world. Like what are your views on it? And I might start with Dimitri.
Sorry, just trying to unmute. I think in few years it's going to be so seamless. I mean, as far as I see it, you just right now the pre-market starts at 4 a.m. You're just going to be moved, instead of starting at 4 a.m. it's going to start at 9 p.m. and it's just going to Eastern time, and it's just going to run whole day as it runs now, and will be really not big difference. I think also you'll see that once the stock exchanges start operating, you'll see the market makers like your Settles and Virtus will start offering execution services for the overnight, because now you have the SIP and then BBO, and they can kind of offer those services. I think also you'll see expansion of options trading. So we'll see single stock options that start trading around the clock, because obviously they follow the stocks, and so once you have stocks trading 24 hours, you can do options and so forth. So really those two big things. I think the emergence of
Somebody must have not liked his answer.
It wasn't me. It wasn't me. I think Dimitri.
Did I get cut off?
Yes, you did. You did.
I'm back. It was like,
I swear it wasn't us.
Yeah. Yes, it was a big lightning outside that interrupted our. But yeah, I think it's the market makers and the options trading.
Thanks, Dimitri. Brian, you guys have been in this boat for a while. Again, not to use a pun, but like you're the most mature venue. Like, where do you see things going? And are there opportunities for you, or are there challenges with the exchanges coming aboard in 1 to 5 years?
Yeah, Opportunities and always challenges, right? So we've been at it for 5 years. I still say that we're in the first inning, maybe approaching the second inning of 24-hour trading. It exists today, right? Equities are trading 24 hours a day, 5 days a week. It's not coming, it's been happening. The notional on any given night is, a couple of billion in notional, and that's just going to grow as the ecosystem grows. I view the competition to be a good thing. I think as we get more competitors into the space, such as Jason's firm, Bruce, and others, I think the volume just grows, right? As I stated earlier, I think the exchanges are far out. I think there's too many thorny issues. I don't think the regulators are focused on it. It's going to continue to grow. I still think we can get to 100, 200 million, a billion shares, over the 5 year period in the overnight session. What's going to come quicker than we think is tokenization, right? It's going to happen. I think the administration, the Trump administration, the SEC, very crypto, focused. Now is the time to strike, and people are striking right now. So it's going to happen sooner than we think.
And Jason, and thanks, Brian. And Jason, over to you. Like similar thoughts, or
Yeah, I mean, look, I'll echo what everyone said to throw a few other things in there. One thing's for sure, I think we're going to be kind of laughing at the fact that, we talked about this as our shiny new toy as much as we have. Trust me, I enjoy it, but it will be just a standard part of our trading day, right? And we'll look back and say, remember all the fun we had playing with the shiny new toy. And the reality is, though, I think 24/5 is just the start, right? There is no reason with the technology we have today that we cannot, bring this to 24/7 in due time. So I think, as Brian said, we're in early innings, and I think one of those later innings is having parity with the crypto market and truly seeing equities trade on a 24/7 basis. I know some folks don't want to hear it; they don't want to think about the staffing implications of that or the tooling. But the reality is the demand that brought this will bring 24/7 sooner than later. So I think that is something that's certainly top of mind for us. Certainly with every decision we make from a strategic and product standpoint. The other thing I'd add in, as Brian mentioned earlier, we are seeing, and this is on the Bruce side as well, we are seeing growing interest and participation at the institutional level. And as we know, every order has a unique order profile, right? And the tools you use and the manner in which you navigate through our markets to execute that order and find liquidity, is, and again, in the interest of best X is integral and specific to that order. So tools such as algorithms, right? Tools that add additional layers of logic to that navigation process and liquidity sourcing process, will be enhanced, with the introduction of institutional liquidity. So I expect, some evolution of benchmark algos to support a 24-hour trading day. Certainly as pre and post market is growing in both, notional and volume. We're seeing that become a more and more important part of the trading day. And, we'll see the response, from the brokers that support that, large asset manager community, both in participation and product.
Thanks, Jason. Ed, what do you see in your crystal ball for the next few years?
All those things that everybody said so far. I think what we have been talking about this for quite a while, but I think we're gonna start to see a pretty rapid expansion of what this looks like soon. I think that for the industry participants that aren't here today, the primary industry participants, they'll be here in short order. That there really has been a sea change in responsiveness here, and they're going to see that the world is 24/5 at this point in time, and they need to be there. So I think as you see some of the ecosystem challenges that are or hurdles that are removed, you'll see more participants come, and you'll start to see a really robust period of liquidity expansion and the tools that come along with that, things like algos. And then at that point in time, there still is 2 more days. I think that we do have our customers that have told us that they like to engage with markets when on their time. And I think that growing liquidity to a spot where we feel as good as 9 o'clock on a 9 Central, 10 Eastern on a Tuesday feels the same as a weekend. It's a great spot for us. Now, maybe it's not the whole tradable world, but we think that there are things that can be supported that way, whether that be on the weekends or different asset classes as well. We see a world where there certainly is enough liquidity that our customers can engage around the clock.
Said, and I think where you're sitting is a good metaphor for 24-hour trading. When we started, it was dark, and now it's bright. So, yeah, thanks for the early start. Now, Steve, again, you're wearing two hats here, and like, where do you see the evolution from, like, an end client perspective, and the demands are going to come your way, and what's that been like over the last few years, from when you were trading dual listed way back when to now, where it's all electronic and there's multiple venues trading 24 hours a day?
Look, time moves in one direction, progress moves in one direction. So, it's clear the direction that progress is going. I think the pace will depend upon markets remaining US centric and robust. We've been talking about this from a US point of view. There are plenty of global companies that could fit into this paradigm as well. And it's just really a matter of how we approach all this. But and again, a lot of what's driven this is both the long-term global bull market, the increase in individual participation, and sort of the dominance of U.S. mega caps. So to the extent that persists, that will drive the pace of moving in this direction. Bottom line is, show me a casino that closes, right? At this point, I hate to use that metaphor, but I do think it applies. The customers want to be trading, speculating, investing, whatever it is, at all different hours. And so the industry is going to accommodate that as long as the demand remains robust.
Thanks, everyone. I think we'll move to the Q&A session. We've got some good questions that have just come in on the chat. We'll go for the first one. How does the SEC see after-hours trading growth? Are they concerned about risk to the wider retail public due to such volumes happening outside the tightly regulated exchanges? Could they curb it in the future? Maybe before we go to venues, maybe we could just ask Ed what his feelings are from his clients, and then we can switch to venues.
I think that from SEC or FINRA, either the primary regulatory bodies from where I sit today, I think we see with the recent regime change, I think we see a more cooperative environment. I think that the environment in which they are trying to prevent activity and just slow progress is not beneficial for the participants in the marketplace. I think that we're seeing greater cooperation in a way that, like, let's put in place what is meaningful for these sessions, and preventing people from taking actions when they want to is probably not a path forward or a good way to go about business. So I think that we'll start to see as far as interest or concern on their side, I think that there's concern because it's a growing piece of the marketplace in general, and something that wasn't there in recent history. But what they are doing is making sure that the right guardrails are in place. So I think as we grow and the different iterations or paths that could come from this, we will see, I think, responsible and thoughtful framework at this point in time, which is I'm not going to lie, it's a welcome change from what we've seen before, which was kind of the stick approach. I think that we all know that this is a marketplace that is growing and are looking forward to this path, and I think that they're on board as well. So I think that I don't see too much on the front. They want to make sure that everybody has the right protections in place, but they're also trusting that the primary participants are good faith actors and letting us show them the right way to do so.
Jason, you mentioned it earlier on today earlier in the webinar that there's a meeting today. Like, what are your views on how the regulators see it, and it sounds like it's evolved from what Ed said. What's your perspective?
Yeah, look, a couple of things here. First, I just want to address one part in the question, Mara. Yes, exchanges are tightly regulated, but just to, be clear, an ATS, an alternative trading system, is, all of us are FINRA registered broker dealers, SEC registered broker dealers with, public filings through SEC and regulated under SEC regulation ATS. So, while we operate and are regulated under different pieces of SEC legislation, we are tightly regulated by the SEC. Brian, I'm sure, and Steve, certainly with your ATS, we know this well. The ATSN filing process, again, anybody is welcome to look at our Form ATSNs. They are public documents that outline exactly how our ATS operate. They are available on the SEC website, and you will see the level of detail that is put in. And I can assure you the process of going through that line by line with the SEC is both diligent and cumbersome. So, and of course, happy to answer any questions about that offline as needed. Murray, to your question, look, the conversation today on the order protection rule with the SEC, right? Obviously very specific, but the ties to the overnight trading session really is that we are looking at one session where it is not enforced, and evaluating what a world might look like should there be changes during the core session to not enforce the order protection rule. The reality is there's been so much enhancement from a technology perspective over the years, and certainly with the importance of best X on, as Ed said, every single order that's routed into the marketplace. Brokers really have, a mandate on which they operate and policies and procedures that, may allow us to make some changes to, regulation that's been in place for a couple decades that, with those advancements may no longer be necessary and may actually open the door to future innovation. Sort of leads to, what do we think about the overnight? Look, largely to this point, it's been one of these things where let's see what market-based solutions can bring to the table. And, I think we've done a pretty good job, right? Bruce is coming to the table with exchange-grade technology using NASDAQ as, our matching engine. You're hearing others here on the call use MEMX, essentially all bringing exchange-grade technology to the overnight space. Additionally, we have things such as price collars. Blue Ocean and Bruce operate with very similar price collars. That's done intentionally in the interest of having consistency for the investor experience. But those things are taking what we have available today under the current ecosystem and current regulation to put in protections for both issuers, investors, as well as any institutional participants that come to the table. And so as we mature, as things grow, as market level competition increases, we have the opportunity to bring additional market level and market-based solutions to the process, in advance of what may be more regulatory guardrails. But certainly as this grows, eyes will be on it. But I applaud the participants so far, both at the broker level and the venue level, for really taking the lead and thinking about these things through in a diligent manner that, I think is providing a pretty quality customer experience to bring 24-hour trading around the globe.
So, Mara, I would add that certainly eyes are on it. We know, right? We have regular dialogue with both the folks at the SEC that regulate us and folks at FINRA. We spent the better part of yesterday morning meeting with the folks from FINRA. They're on the webinar this morning listening. And we have a great dialogue with them, right? They want to understand how it's growing, where it's coming from, who's using the platform, in what way are they using it? Is it just retail? What regions of the world is it coming from? What are you doing to surveil for, trading on your platform? So I would say it's a great dialogue, both with the SEC and with FINRA. As I said earlier a couple of times, we're in the first inning here. It's starting to grow. We do 2 billion in notional. We've hit 4 and 5 billion in notional. Still a small amount in the grand scheme of the total notional traded on the U.S. equities on any given day. But the regulator is in touch, and they're watching it grow, and they want to make sure that it grows safely.
I want to add, in terms of the question, certainly SEC is on board. That's why they granted us first ever stock exchange license. It was not an easy process. They're certainly very aware of what's going on. So just give you a scope, it took us over 3 years and over 80 meetings with the staff to get the license. So we had to go through every functionality, every page, and the staff has been very involved and very supportive, and they spent tremendous amount of time on moving United States into this next era. And certainly exchanges are much more regulated than ATSs. As you guys know, exchange is a very different animal. And I think with this license and followed by granting a license to New York Stock Exchange, this will change tremendously the game for overnight trading. Also, and look, even though us and New York Stock Exchange received our licenses and permissions to trade overnight under the old administration, the new administration is also very supportive. I have been to DC. I met with the new chairman and head of markets, and they certainly see and and head of new head markets, Jamie Sally, certainly said that they see that expansion of America trading hours is a big advantage of America. It creates jobs, and it will improve further American markets. So I think they're fully on board. This is going to be completely regulated. You're going to have exchanges, and it will be no different from trading at 5 a.m. this morning. It will be no difference trading at 3 p.m. or 11 p.m. So it will be regulated and settled, and will be very seamless.
Thanks, Dimitri. Steve, have you got anything to add? No, I think we're done with this question. I think you're on mute.
I think the others covered it very well. I'll leave it at that.
Okay. Well, on that, we've got a bunch of other questions, but we'd be going for an hour and 15, so I think we need to wrap it up. I would like to thank all the participants on the call, especially given that it was super early morning over there. It's been a lively discussion, and I think it's educated me and hopefully a lot of the audience on the interactions between brokers and the venues and how quickly this is all evolving. So thank you very much on behalf of the FIX APAC trading community, and yeah, we look forward to talking to you again. Thanks a lot.
Thank you, Mark.
Thank you very much. Take care.
Thanks, everybody.
Thank you.
Thanks all.
Great talk.